Hello, I'm Angeline and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, US stocks indicated higher after the Fed signals rate cuts are on the horizon. The Bank of England and European Central Bank also are out with their interest rate decisions, both keeping rates on hold but diverge slightly on their outlook. In a moment, we'll have IG's Chris Beecham with us with the live analysis. And Adobe slides after a downbeat full-year revenue forecast. Now, not long before Wall Street starts trading, as I mentioned earlier, we've just had the ECB, as expected, standing pat on interest rates. IG's Chris Beecham joins me now. As expected, Chris, but they did tweak their outlook slightly, didn't they?
Yes, cutting inflation forecasts, really. And I think for the BOE and the ECB, their work has been done for them by the Fed. They have to dance to the Fed's tune. The Fed's saying inflation is coming down. It's hard for these two central banks to go against that, really, I think. And as we said, with the dollar weakening, that pushes up the pound and the euro, and that effectively tightens monetary policy for them anyway. So it makes sense for both of these central banks to remain exactly where they are for the time being.
Now, what happens if the Fed starts cutting slightly more aggressively in the first half of next year? Are we likely to see the ECB having to follow suit?
That could be the problem, I think, because, of course, that should then push the dollar down even further, which drives the euro higher, which again acts like an interest rate rise. And suddenly the ECB will find itself with monetary policy tightening outside of its control, if you like, driving look mum, no hands almost, with no sense of control over what's happening next. And then that makes life more difficult for the Eurozone economy, which, as we know, is struggling much more than the US. So I think, yes, if the US goes first, again, the BOE and the ECB will just find that the decisions have been taken for them and will have to move in response.
Let's take a quick look at the reaction for the euro now. Just
this 2-minute chart for euro dollar. So you had an initial rally off the back of the decision, and it's now lost that ground.
Coming back off, isn't it?
Yes, this is the 2-minute chart, of course. You put this move in context, though, as ever. This is the move over the past week, really. And you look at that big move in the wake of the Fed, really. The dollar coming off, the euro surging. And that will, of course, then put some pressure on Eurozone stocks, as you've got the DAX and the CAC at those record highs. So you could maybe see some weakness in European markets for the next couple of days.
Right, thank you very much, Chris. We will check in with Chris, I'm sure, in the coming week. Just taking you through some stories that we have been looking at for you. Amazon has confirmed, this is the Court of Justice confirming rather, that the European Commission has not established that the tax ruling given to Amazon by Luxembourg was state aid, and that was incompatible with the EU's internal market. This is according to the Justice of the European Union. What's also interesting is that this comes after a long-standing dispute between Amazon and also the many courts around the world with regards to its taxes. Adobe is another one that I want to point out as well, because Adobe shares, when they start trading in the cash session, indicated at the moment down after a downbeat full-year revenue. And also Moderna is another one that is in view. Moderna up on a trial success for the melanoma vaccine plus Keytruda. Now, just quickly taking you through oil prices as well, because we have had oil weakness in the last few sessions. Brent and WTI both being weighed down by pressure over the ongoing supply concerns. Also, IEA has recently cut out saying that it's cut its 2023 demand growth forecast by 90,000 barrels per day, also raising its 2024 demand growth forecast by 130,000 barrels per day to 1.1 million barrels per day. The gap remains between OPEC IEA views on 2024 oil demand and oil demand growth. Now, before we go, just a quick reminder for you, the Bank of England and the European Central Bank standing pat on interest rates. The ECB, however, tweaking its inflation forecast. Bit of a tick up for the euro, but it's come back off now. And just before we go, a quick reminder that the US market's ticking ever so slightly higher after the Fed signaled that rate cuts are likely to come in 2024. And that is it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline on Twitter. This is IGTV.